Namaskar. In this session, we'll be discussing the very renowned topic, that is TDS. We all are aware of the TDS. The full form of TDS is tax deducted at source. Whenever full form of TDS is asked, please don't write tax deduction at source. That is wrong. You will lose the mark. Tax deducted at source is the full form of TDS. So what is TDS? Let us understand. As we have learned, the full form of TDS is tax deducted at source. So basically it was introduced to collect the tax at source itself. The tax collection has taken so many steps, and it has seen so many changes also. So tax department later on just launched one scheme, one step in which the payer some sort of payment, the person who is paying some sort of payment, he should be made responsible to pay the taxes. That is called tax deducted at source. So from where the payment is made, the payment maker, he is responsible for the tax payment. So the basic purpose was to minimize the fraud by taxing individual income partially or entirely when it is created rather than at a later stage. So TDS applies to different incomes. Some incomes are well decided by the tax department, and TDS is applicable to only those incomes like wages, commission, interest, dividend, like way. TDS does not apply to revenues. Revenues means collection. Payment is separate, revenue is separate. So TDS is not applicable to revenue. TDS is applicable to payments only. The Income Tax Act has recommended various TDS thresholds for different. So in time to time, Income Tax Department recommends that who are eligible to pay tax at source itself. So there are some responsible persons. Once they are making some specified payments, they are responsible to deduct certain amount and to pay as a tax to the government before making the payment. Before making the payment, that tax should be paid to the government. So let us understand TDS. What are the necessary steps? TDS operates on the principle that any individual making given form of payment to an individual shall deduct tax at origin itself at the rate prescribed by the Income Tax Department and deposit it into the government account. So the first principle is that the individual shall deduct. Who is the individual? That payment maker. So the person who is making the payment, that individual is responsible to deduct the tax amount before payment and the deducted amount to be paid to the government as a tax before payment, and this will be called as a tax deducted at source. The person who is deducting the taxes, he must make the payment to the department. Then the deductor must be qualified to deduct. Everybody cannot deduct. The deductor must be qualified to deduct the taxes, and the person deductee from whom it is deducted, the deductee should be responsible to pay the taxes. The deductee should come within the taxable limit. If he is below the taxable limit, there is no question of TDS. So the deductee must be in the range of taxable limit. So if he is liable to be paid, yes, tax TDS to be deducted. If individual is authorized to deduct, yes, TDS to be deducted. And the person who is responsible to make the payment, he is responsible to deduct the payment. And whatever TDS is deducted and whatever amount is paid to the tax department, for that there is one statement that is called Form 26AS. So Form 26AS is a document showing the amount of income tax deducted and deposited in the name or PAN of an individual in a given financial year. So this is all about the TDS. We'll meet in the next class. Till then, namaskar.